Welcome. You've just entered the trading pit. Your home for sophisticated takes on the crypto markets. It's February 27th. And here in the studio is JJ and Ben Lilly of J Labs. As always, I'm your host, Marconi White. And today's top story, it's all about price action as Bitcoin convincingly clears the stubborn 52K resistance. Yesterday, Bitcoin climbed from 51,000 and touched the 57K territory, a 10% move in just 24 hours. JJ, the Bitcoin bull train shows no signs of cooling off. Are we knocking on 60K by the end of March? And man, are we moving too fast?
We'll have to see. 60K seems like it's going to be a tough hurdle to clear from here, but the way things are moving, you don't know. It's just kind of runaway train at the moment. There's just that continual price insensitive buying coming from ETFs, and then you add on top of that short squeeze factors. There was a lot of hedging last week, and it seems like those hedges are getting blown out. And then additionally, we have a gamma squeeze happening on options, which we'll get into. So it's just kind of created a perfect storm yesterday, and Bitcoin basically found no resistance once it broke above 52K, and it was off to the races. So we'll see how these flows perform today, and maybe even get 60K in a few hours here. We'll have to see.
We'll have to see.
Interesting times.
It's definitely in the realm of possibilities. But I guess the second question, is this moving too fast for your liking for a bull run?
I mean, this is kind of what you would expect. Like, inevitably, Bitcoin's going to make all-time highs at some point, right? So these kind of 10% daily moves are to be expected. But on like a shorter time frame, look, we went from sub 51,000 on Sunday night to over 57.5, I think, this morning. So yeah, I think it's too much too soon in the near term. That doesn't mean it can't get crazier, but just mind your leverage here. I would preach some caution. The move's already happened, right? Like maybe we get this at that outlier scenario where it goes 60K plus in a single day, but you're reaching the max here.
Right. Well, we're definitely, for all those who are here already, welcome. But we're definitely going to be covering our thoughts on getting into a trade right now. I think Ben and JJ have some interesting analogies. Ben, the ETF narrative is a huge part of the story that you're reading on X and everywhere else. February 26th saw net inflows of 520 million. And that's only part of the story. Yesterday, Eric Balkanes reports on X. Milestone IBIT has traded 1 billion worth of shares today so far, which ranks it 11th among all ETFs. That's just 0.3% of all ETFs, which is insane. Ben, do you think this is real adoption, or are these just degens buying the ETF?
We're so back.
We're so back.
I mean, I'm running on like just a few hours of sleep right now because the amount of messages coming in is incredible. Just the activity, this price action just begets more price action and begets more activity, more flow. This is that reflexivity loop that we always discuss when it comes to cryptocurrencies and Bitcoin especially. Granted, it does go both ways, but right now it's definitely in our favor. And these ETF flows, I mean, just yesterday looked like about 520 Bitcoin in terms of on the net, and that average is just under 200. So that's more than double like the average flow. So this is significant. They're clearly working on the weekends to get the flow ready on Mondays. These Monday morning kind of initial impacts on traditional financing ETF flows are mattering more and more. Do I think they're degens? No, I don't, because I don't think a degen is going to log into Interactive Brokers and kind of open up these positions. They've already been allocated likely for 6 months, 12 months, 24 months, etc. So I do think this is fresh exposure into the market.
Fresh exposure
24/7 to pump our bags. It's a beautiful thing.
Well, we'll take it. Well, if we think about sources of demand, it's the story right now is all about ETF. You just talked about net flows, but a big story I have to say is going to be around corporate treasury. ARK Invest has often noted that corporate treasury could be a massive driver. I think in the report that they put out this year, perhaps it was 2023, they did a bear, a base, and a bull case for corporate treasury adoption, which was 0, 2.5, and 5%. The bull case helping us get to that $1.4 million mark by 2030. And yesterday, of course, MicroStrategy announced it purchased more Bitcoin, 3,000 Bitcoin, now holds 10 billion in BTC. And, I was just thinking this must be Saylor's revenge for all the short sellers who had roughly I think it was 3 million or 22% of total sales short. I mean, it's just incredible. JJ, do you think that this is a story that other treasuries are going to take? You think they're going to take the same path as MicroStrategy after seeing their success?
If they're smart, why wouldn't they? Like, the guy showed that it works, right? You can, if you have a company, you can leverage debt markets, borrow against future cash flows, low interest rate, no liquidation points. You get that cash, you pay it over the course of a decade, and you buy hard assets with it. Hold it on your balance sheet forever, and look at the way the stock prices performed, right? Like, even throughout the bear market of last year, it didn't retrace the pump it initially made from August of 2020 when they initially bought the Bitcoin, even though they were billions of dollars underwater on that position. So I think the kind of writing's on the wall here, and I think other treasuries are going to follow suit. You'll see probably a lot of speculation will come from companies like this. It's going to be a pretty wild year ahead. But they've showed the playbook. Like, this is an actual business model that works. It brings your company revenue, especially with the new FASB accounting changes that they made where those things get marked accurately on balance sheets. So I think it's just kind of throwing open the gates here for more people to follow suit.
Well, I'm looking at pre-market action. The market's set to open in about 8 minutes. MicroStrategy closed at 796, and it's trading currently at pre-market at 871.
There's so many people trapped in this position, and we were discussing this a bit yesterday, is that they got married to a bad position during the bear market. Even like people just started shorting it because they thought, oh, Bitcoin's going to go down, then MicroStrategy is going to get liquidated, their company's going to go bankrupt, and it didn't. And then when Bitcoin broke back above Michael Saylor's average price at like 30,000, they never closed those short positions. It just stayed with the massive amount of short interest. And even still, and now I think you see people reluctant to even close in the face of this. And I think it's going to have a bad ending long term, especially as Bitcoin, I don't know if it's going to happen today, next week, this year, but when it goes back to all-time highs, the stock is going to continue to go parabolic, and there's going to be a lot of people on the wrong side of that if they don't close here in a hurry.
Don't be stubborn, right? Like, that's an El Capo of crypto type of mindset. Like, you have to be willing to change your opinion. Otherwise, you get caught collateral damage and a regime change.
Yep. It's brutal. Like, that's I don't get it. And then there was that popularity of this being a short pairs trade where you long Bitcoin and short this, which never made sense to me because it outpaces Bitcoin. Like, you could see it pretty clearly. When Bitcoin goes up, MicroStrategy goes up more over time.
Yeah, the float doesn't line up with that strategy.
No, there's a whole lot of really good intellectual points you can make about it, etc., but it just doesn't hold up when you do the math here. Like, look, over the past year,
just blows you.
Yep.
It's all about taking what the market gives you rather than wanting the market to change for you. Well, this actually gets into the next part of the story. We're talking about MicroStrategy. A lot of treasuries could go down that path. If they do, this could reach the upper end of ARK's 5% of corporate treasuries doing some adoption of Bitcoin. And, I think given the ETF flows that we've seen thus far, it wouldn't surprise me if their estimate is low, but time will tell. We'll continue to monitor that. But I want to get into the actual price action that we just saw, which just broke through that resistance, as I mentioned at the top of the show, at 52K. When I was looking at the chart before, I think Bitcoin this morning was trading about 57K pre-market for New York opens. But JJ, you and I were talking offline about the real story of what happened here, because I think a lot of people are they look at the ETF headlines and they go, oh, this is what just happened. But there's a little bit more there. Before we do that, I want to give a shout out to Sal, Scott, David, Hoddle tonight, and Strata Trader. Good morning. Good morning. Thanks for joining us on the show. Hit the like and subscribe button. Share this with whomever you want to share this with, because, gosh, now is the time. If they're not in right now, they're going to be missing this bull train, and we don't want that to happen to our good friends and fellows. So thanks for the support, and share this with as many people as possible. JJ, unpack the story that just happened so that people actually know what just happened.
So there was a few dynamics at play here. The biggest thing is that as Bitcoin was looking heavy last week, everybody was hedging, right? We were all waiting for these ETF inflows to slow.
Hey, JJ, I got to break in here. I'm hearing a little bit of chatter on the background. Does someone have some noise behind them? it almost sounds like there may be a TV or something. All right.
Okay.
Looks like we got that covered. All right. JJ, please continue.
So as Bitcoin was looking heavy last week, we were all waiting for these ETF inflows to slow, an inevitable kind of breakdown to like 48K or so. Kind of felt that way, right? And that became the consensus in markets. So nobody wanted to close out their positions. What they do, they hedged. And we see this across different metrics here. Like you could look at true open interest at the time. It went up above 3 billion in just absolute amount of total open interest by the way we measure it here with the true OI. And then when we look at the long short ratio too, we see it was extremely low. So this meant that there was a lot of open hedges in the market. Basically, everybody was waiting for that breakdown to 48K so they could buy more. So naturally, the market kind of moves in the path of least resistance, and it went up from there. So this was effectively a short squeeze on one speculative shorts, and then on top of that, people that were hedging, they're basically getting their shorts blown out. So that kind of creates this reflexive dynamic as the spot inflows come in. We see price reach those liquidation pools, shorts get squeezed, they have to buy back their position, it sends price higher. And then on top of that, we also had a lot of option selling. So market makers were basically short gamma above 50K, basically between 50 and 54K. We can see here they were extremely short those strikes. And that's another reflexive dynamic on the market. So Kelly Greer had a nice tweet yesterday, which basically meant that above 50K for every 1% move Bitcoin was making to the upside, they had to buy an additional 25 million of Bitcoin just to remain delta neutral, which basically means that whether price goes up or down, you're not losing money as price appreciates. So just to stay neutral on those options, they had to keep buying more and more Bitcoin, which obviously sends the price higher. We have another nice insight to this if we look at Deribit, which we could see yesterday. Once price broke above 52K, there was just this mad rush to hedge with perpetual contracts because they needed upside exposure there. So it was just like this kind of perfect storm of where you had the price insensitive flows from these ETFs, so people just buying it to hold it forever. Then you had shorts getting squeezed on perpetuals, and then you had option sellers getting squeezed all at the same time. And that's how you get these really massive moves to the upside, where there's a whole lot of people that want to buy and need to buy, and not many people looking to sell because price just broke above resistance. And that's really how you get these kind of massive single day moves. I think that's what we saw yesterday. Really,
which is fascinating. When I've got Deribit pulled up here, and I'm looking at some of their options contracts. The top one here, Bitcoin, February 28th expiration, 56K strike price call. The last price was just under 3 cents. 24-hour change, 8,733%. I mean, if you're owning these right now, you're killing the rest of the market. Don't go alts, go options.
They expire tomorrow, right? So the thing with that is that there was a whole lot of people short call spreads and different varieties of these things, and they needed to hedge. So how do you hedge it? You buy something expiring quickly, and you just buy it and hold on to that position. It protects your short position from the upside going too wildly. So what we saw en masse was people needing to buy these rapidly. And then basically the market maker can lift the price because everybody has to buy it. So I'm just going to put the price at this number and see if people still buy it. And they can just keep buying it because they have to. And that's how you really get those large, like that's why options are such a powerful tool, is you can get way beyond what you can expect out of alts in a single day if you're in the right options position when these things transpire. And they happen pretty frequently too. We saw this is no different than what we saw in October after the 30K break, when Bitcoin just behaved in a similar fashion, went up over 10% in a single day. It was a lot of just reflexivity, hedging, short squeeze, option squeeze, etc.
I have to ask, we often think about these new participants being TradFi, being the most sophisticated on the planet. And yet I'm caught wondering, do they still have something to learn about this market? Like as far as I understand, there aren't other places where you really have to deal with options, futures contracts, spot in the same way, right? As you just mentioned, they could be using options or in that way, it's more like a commodity, right? Where if you've got the futures contracts, and then if you have options, which is more like equities, right? Yeah. Unless you have stuff being packaged in an ETF, this adds another layer of complexity. And I feel like people are getting their fingers burned as they start to play in the water.
I think it's a lot of crypto native funds, actually, surprisingly enough, that have gotten burned on this.
Okay.
Because I like TradFi, you don't have options readily available yet on these ETFs, which means it's just kind of a one-way street. So people aren't necessarily like, you can trade the futures ETF, BITO, et cetera, against it, but I don't think they're really doing that as much. I think this is more kind of the story of crypto natives underestimating ETF flows and getting burned in the options market on this recent move. I think TradFi is waiting. I think they'll have approval to list options on the ETF at some point this year. It could be next month, 6 months from now. And that's when we'll really see like volatility harvesting and whatnot going on there. But I think this has mostly been crypto natives that underestimate these flows, sold way too many options and got burned here.
Okay. That's good to know. So I guess in the next question that's on everyone's mind, we talked about at the start of the show, hitting that 60K moment, maybe even higher. It feels like the bull train doesn't want to stop. Are you starting to see any signs at any level, either spot volume, perhaps the Coinbase premium on the options side, perpetuals? What are you looking for that's going to tell you that this recent impulse is going to lose a little steam?
Things are definitely getting unsustainable just from that structure we outlaid before, right? You have all these people rushing to hedge. Inevitably, price will slow down a bit. They'll be able to unwind those hedges, et cetera, and get just totally flat out of the market. And that'll have a drag on price. We'll probably see volatility in both directions from here. So kind of the analogy we're using as we were discussing this in pre-market is if you're trying to enter a position here, it's like being helo dropped into an avalanche on skis. Like you see those like the Red Bull videos, et cetera. That's what it's kind of like if you're trying to find position here. So just wait, let things kind of dial down a bit. Even if we go to 60K, know that volatility just begets more volatility and you'll see kind of this whiplash effect. What I'd really be looking for here is to see the long short ratio get back above to like 1.5 or so. It's still pretty low. So there still is this hedging going on. The basis trade, which is basically your longing spot and then shorting futures against it, has a pretty juicy premium. So that's just encouraging more people ultimately to enter this basis trade. It's risk-free, you're fully hedged, and you can just collect this funding. So it wouldn't surprise me if we do see another leg up just because of that, because the incentive's there to just simply buy spot, short futures against it. But at some point this will unwind, so just be aware of where we are. Like we may not be at kind of the max peak euphoria moment now, but it's certainly coming. Most likely if we get over 60K, you'll see this long short ratio just go absurd, and that's probably a good top signal.
A midterm top signal, right? Not the end of this overall bull market. I don't want to scare the participants we have here. Ben, I want to bring you up here because we talked several times on the show about the importance of these new ETF flows and what they mean for the market and how they're changing our perception. You joked on X about how, this time is different. We're actually starting to see a new paradigm. And you recently put out a tweet about, I guess you can call it a minor study, an analysis you were doing on ETF flows and what they may suggest in terms of what's bullish that week. Break that down for the audience here, because they may have missed that, and I think it's a pretty important insight.
Yeah, I mean, I joked that everyone always says this is a brand new paradigm. This is when XYZ event happens, and everybody is suddenly going to realize the absolute beauty of crypto and Bitcoin to salvage and save everything that's negative in the world. And I say it because it's tongue in cheek, because I've heard it so many times. It feels like, even in bull markets, you almost start to get numb to it because you hear it so many times, almost month after month. And, that's sort of the reason why, I made a comment like, I'm just going to leave X for a little bit, just be less active, because that tends to be a bit of an echo chamber there. But to that point, right, I'm going to go back on my word a little bit. The ETF flows have changed market dynamics. We have to be very realistic about that. Monday morning, opening bell hits, you see the activity. I pulled up on my screen a bid-ask ratio for spot, and this is Binance specifically. So this is the non-TradFi exchange. And once those flows started hitting the tape, you saw the bids start flying in and chasing. Okay, this wasn't very normal. Especially in the last bull run, you didn't really see this. And so the fact that it's just completely taking the market, and then everything is sort of, what's the word where you almost kind of let something go, or you throw it and then it goes a little bit further than you want to, and then it has this residual effect where it kind of just keeps going for longer than you expect. That's what we're seeing. So the ETF flow drives the initial push, and then you're starting to see kind of the crypto native exchanges start to follow suit and act accordingly. So, is this who's wagging what right now, and I think the ETF is the one that's driving it. As far as that tweet, I was kind of just trying to understand more of the long duration trends that might hit according to the Monday flows. Let me pull that up. I think I have it over here. Yep. So I just went ahead and I tried to look at the various Monday ETF flows. I think there was a Tuesday in there because Monday was a holiday in the US, so markets were closed, and it really just showcased that follow-on flows on Tuesday really kind of set the stage for the week, but also, what was happening the day before. If this was an uptick over Friday's volume, then the trend would persist for the rest of the week. And so the way that it was stacking up based upon the flows yesterday, moving from Friday to yesterday, that would suggest that this trend would persist for the rest of the week. If you see today's flows also show positive, then that's going to be a good Wednesday, Thursday, Friday follow-up based upon what we've seen historically.
That makes sense intuitively too, right? You think of somebody that bought the ETF last week, it was at 50,000. They go and tell their friend, hey, I made 10% in a day. And then it just kind of creates that FOMO domino effect where everybody's buying it. They're trying to catch the next NVIDIA runaway train, whatever you want to call it. They're just searching.
It's like you're pushing a boat in the water essentially, where your ETFs do the initial push, and now the crypto markets are going to continue the push for a little bit longer for the rest of the week.
Mm-hmm.
And it's like this little effect is what we're seeing take place right now. And I was trying to look at the order books on NASDAQ yesterday, and you can almost see the change in bid asks taking place right in the afternoon, and then you see what happened overnight. So this is now follow-on activity that's happening in crypto.
I want to ask about the analysis. You mentioned we were joking about this new paradigm. We've got now years of, let's say, the crypto native analysts being able to look at on-chain data, price information, and develop some picture of where the market's going. Do you see some of that analysis no longer being as effective to really paint a picture for where we're going to head next?
Think of it like a sequence of events. So initially, what we saw on Coinbase was sort of that organic bid that took place in the market. It was fresh dollars coming into the system. And then you had the kind of secondary, tertiary effects that happened on other exchanges, and then the on-chain activity would follow suit. You kind of think of it as that sequence of events. And you now just kind of have a different part of the market just showing itself as like the first sequence of events now. So you have the ETF flows. That's your first sequence. What happens second? What happens third? This is a little equivalent to I made a video that discussed kind of a very well-known thing in crypto, which is, dollars flow into Bitcoin, then they flow into Ethereum, and then they go down further the risk curve to kind of layer one alternatives, especially EVMs, and then down into the micro caps. And then eventually the meme coin frenzy takes place. And then it kind of cycles back. And then these little cycles going into Bitcoin, out to meme coins, back into dollars, back into Bitcoin, just to kind of think of it a loop. Right? It happens many times during a cycle, happens many times in a bull market. And then you also kind of have it when you zoom out, you have it on a longer duration aspect as well. So it's happening on various time frames throughout an entire cycle. Same thing with ETF flows. You can think of it in a similar way, similar manner in terms of the dollars flow into the ETFs, then it flows into crypto, then it's flowing on chain. And it's not necessarily that the same dollar is moving in that order. It's just sort of like how the tide's lifting all the boats. It's in that progression. It's in that order. And so if you study that, then you can take advantage of the market where that happens. But, as far as I really want to stress not how much this is taking it by surprise, but this is when we sat down over a year ago and we drew up our estimates. I have it on my chart here. I was trying to pull up the old chat. I couldn't quite find it, but I do recall kind of what our benchmark figures were, because I don't really like to say, hey, I think Bitcoin's going to hit this dollar amount. But you give it some ranges. You gave it some kind of probabilities.
Mm-hmm.
You know, our highest probability was like just short of 40,000. Yeah, we blew past that pretty early. And it became well known, like, okay, we're going to blow past it. Let's see how far we go. This is probably going to hit our 48,000 mark. I don't think it's going to quite hit the 53,000 unless a lot of what JJ spoke about with a lot of this gamma squeeze effects, kind of the regime shift, volatility blowing up, happening. And we saw that happen, and it just absolutely blew away our top estimates. And so these ETF flows, they just keep coming, and you just have to be aware of them. You have to accept them. Don't let yourself fall out of the market, right? We always talk about making sure to hedge and don't have an allocation fully outside of the crypto market, because then you're just going to sit there, as JJ said, and start jumping out of a helicopter, doing a helo drop, and pray to God that an avalanche doesn't start falling on you.
That's right. Well, in your mind, we talked also about speed and pacing of this, right? We don't like to give price targets for the reason that at least I would say that they're not very accurate always, right? And it's kind of just picking a number and kind of having a justification, rather than, I think what you've just shared is follow what the market's giving you, understand why it's giving you that, and then be able to react to it.
Mm-hmm.
But are you at all concerned that we're moving quicker, or is this more just, listen, we underestimated the amount of volume that would come in from ETFs? Fine, we're now seeing it, great, and it's going to go higher. Or are you saying, like, no, this is too much fervor too quickly, and I fear that this may actually cap the size of what we could otherwise have as a bull market off this halving cycle?
Yeah, I would be lying if I say that's not a concern. The speed at which it is happening, like, you can see there's, like, if you actually pull up kind of Bitstamp for anybody that uses TradingView, and you look at that price action over the course of the last 10 years, you have a giant parabolic formation happening. And, that's kind of like, I laugh because Suzu comes on the timeline, the crypto timeline, the other day, and he starts saying, oh, it's the super cycle time again. It's like, okay, blind squirrel is going to find a nut every once in a while. And you're going to be right until you're proven wrong. But it's like, shoot, this is a parabolic price action taking place. But if it happens this quickly, are we gonna kind of miss out on a longer duration run in rally that sees kind of the rest of the ecosystem rise? That is a concern. However, I'll say this, like, you don't see VC capital coming in yet. And that's usually a sign that you're kind of like not in like the last innings, but you're probably like right around the 6th, 7th inning, if you were to use a baseball game analogy, which has 9 innings. Because once that capital starts flowing in, they start allocating it, and they kind of do the spray and pray formation around those dollars. And you don't see it yet. We're still very low in terms of dollars coming into the system, right? So you have all of these kind of other forms of capital that are going to get ready to come in. And so on the one hand, yeah, I'm worried, but it's probably going to provide a lot of opportunity in terms of volatility for the next few months, which I'm really hoping to see. Seeing a whiplash right here, I think that's going to be great, because volatility is opportunity. Volatility is a lot of headlines on the news. Oh my God, Bitcoin dropped 15%. Because, when I first read about Bitcoin, that feels like a long time ago now, it was actually on the Mt. Gox crash. And I was like, wow, that's interesting. There's this money and it crashed. So what is it? I want to know more, right? It was almost like somebody saw a burning car and they were kind of curious, right? That was my reaction to it. So the volatility, if we see it, this whipsaw action, that would just bring in more attention, more demand down the road. So on the one hand, yeah, a little bit worried, but I'm not shaken. There's still a lot of opportunity coming.
Okay. Well, that's good to know, because I think there's a lot of people asking, they're expecting a pullback. We saw some notes on X from some larger accounts, analyst accounts that we follow, calling for a pullback in the low 40s. I think some of that is just history, trying to telegraph history. And as you said, we do have some new market dynamics, so we need to respect that. Also put in the context of nothing goes up forever. So I think with that, we can actually talk about what, the external risk factor that we always like to cover here. I know for some, let's talk crypto all the time, but it's important to understand where crypto sits in the ecosystem, talk a little bit about the Dixies. So I want to ask about that, JJ, in a moment. But for all those who are out there, thanks for joining us this morning. We're here every Tuesday and Thursday to provide you some commentary, analysis, and breakdown of the crypto markets. If you haven't already, like, subscribe, and share this with everybody. And if you are looking to get deeper into your trading journey, it's time to sign up at CoinCall with the link in the description. JJ is always sharing the CoinCall takes. He shows you exactly how it works and some trades that you can look at. We'll see if we can get into that later today. But CoinCall's got an elegant interface, very competitive fees, and you can trade options, perps, and spot, everything that you're going to need for your options and trading journey. So right now is the time to get started. As I said before, it's time to practice on those options so you're ready when that big fat pitch happens, which we still expect to happen. We'll come back to that. All right, JJ, walk us through the Dixie. I looked this morning. It looked like it was around the $3.76 mark. What's it looking like right now? And is it still a risk factor we need to consider?
It always is, always is. So right now it looks like it found some support at its 200-day moving average currently. Still resting on that 50 RSI mark on the daily as well as the weekly. And what it's really waiting for is ultimately this week's macro numbers. We have GDP as well as PCE. GDP is tomorrow, and then PCE and jobless claims on Thursday. So that's kind of going to provide, I expect that to provide some decision here, whether it breaks down below the 200-day moving average and probably retreats back to the yearly open levels around 100, or if it continues this kind of massive uptrend that it started forming in January, in which case I think Bitcoin's going to follow suit. Either this is going to provide the fuel we need for 60K with kind of some favorable GDP and PCE headlines, or it's going to mark the end of the rally when it starts to move up. So keep an eye on that this week, especially tomorrow and Thursday. I don't think it's a coincidence that Bitcoin's moving like this at the same time. DXY is kind of at its inflection point here. So definitely keep an eye on it. I think we'll see some decision come down from Dixie following those numbers, and ultimately Bitcoin will follow.
So to recap here, from a crypto specific perspective, we know that this rally and the drivers behind it can't last forever. But right now, we're not really seeing signs of cooling. But if the Dixie runs hot, given some of the macroeconomic data to come out, we may start to see over the next couple of weeks, see a dent in this rally.
Yeah, you see it get back above like 104.20 or so. I think that's probably as good a risk off signal as any.
Okay. All right. Well, with that, I know typically we like to go a little bit deeper on the macro side, but I want to keep it in crypto because so much is happening right now. We've had a lot of questions either on the show or offline of people asking for price targets, what we expect in the market. So I want to talk a little bit about positioning right now. JJ, earlier in the show, you talked about how this is about being dropped into an avalanche and trying to figure out how to ski. So walk us through your thinking there. I just want to revisit that because I know there's a lot of people right now that are feeling the FOMO, saying, hey, I missed out on this run up. Ben even mentioned he's getting this in his chat group saying, oh my gosh, I can't believe, because I'm waiting for this pullback. Is this the time to execute on that FOMO? And if it isn't, why isn't it?
Absolutely not. Anytime you see like the move's already happened, right? So you don't want to be chasing a move. And especially now, like we were saying, this thing could go to 60K. So you don't necessarily want to be shorting. You want to wait for the market to come to you in these scenarios. And I think we have those macro numbers coming out tomorrow and Thursday. And one of two things will happen. Either that'll give the fuel we need for 60K plus, in which case your risk reward for shorting in that area is much greater, right? Like you don't run the risk of it blowing off further and overextending as you do now. And if it resets, then you'll ultimately get a good dip opportunity to buy maybe back towards the 50K region or maybe even below. Maybe we finally get that 48K and whatnot retest now that kind of the hedges are unwinding, right? So I think what the market's trying to do right now is generate liquidity. That's kind of the name of the game, is that it absorbed as much selling as it could in that 50K region. You had a whole lot of people hedging. You had people de-risking, expecting ETF flows to unwind, and then they just picked up further. So now we see this overextension, and you just want to see it for what it is, right? This is the market trying to attract you in. It's trying to lure you. It wants to create FOMO, and then ultimately it's going to rug you. So you just have to be aware, like the dynamics at play here, right? Like this isn't a sustainable structure for all the reasons we mentioned, the short squeeze, the gamma squeeze, etc. It creates a lot of positioning that isn't going to be held for a very long time. So naturally, those positions are going to unwind when we reach a certain point here, whether that's now or 60K remains to be seen, but just kind of take it level for level and realize that the market's trying to attract you in if you're sidelined.
That's good. That's a good PSA, as I like to call them. Ben, anything to add there from, because I think you were basically echoing his sentiment when we were talking offline, but anything to add to that perspective?
Not necessarily. Just, JJ and I sat down, God, what was it, 6, 7, 8, 9 months ago? And we kind of put our heads together to put like a DXY risk metric together that really just kind of encapsulated our thoughts on how the dollar, when it influences crypto, and trying to get that to really just showcase some sort of signal that, hey, you know what, the dollar's starting to run hot. This is what it's doing. Maybe it's time to risk off, and also the alternative, DXY is showing that conditions are prime, that if Bitcoin starts to catch a bid, right, it's clear sailing above. And I pulled up our OEMS, our order execution management system at JLabs for clients, and DXY risk metric, and just a few days before this move came down to 0. And so it was just giving it signal, clear skies ahead, and it ran hot. Are we going to see this change really quickly? You got to have some pretty negative data coming in. I don't get that sense that it's coming down the pipeline right away. But as we keep saying, if the market wants to pull back, it's going to find an excuse on any news.
Yeah, it's all positioning, right? Like we were saying earlier, the market moves in the path of least resistance. So if we see kind of the slides get tilted to where there's way too many long positions in the system that need to get cleared out, we'll see the market sell off and probably recover right away if it's just kind of a mute data point. But the market will find its reason to whipsaw here and wipe out the over leverage. So be aware of that and look for those wipeouts to buy ultimately.
Yeah, I always have some dry powder, as I like to remind people with my PSA. We have a question here from Strata Trader. I'm thinking of taking some BTC profits off the table. Any suggestion for a rotation into USD or ETH? So I want to leave that open to you guys. If you are going to take some BTC profits off the table, are you going further down the risk curve, i.e. ETH, or are you holding it in dollars until we get a little bit more direction from the market?
To be honest with you, the way this is trending, right, and like these inflows we've seen, it's just been so massive that I wouldn't be in a rush to de-risk spot. If I was going to do that, I would just sell volatility against it. So you sell out of the money calls, say 60K calls for March, sell those, and then use that premium you collect. You hold your spot so you're not exposed to unlimited losses, and you can use that premium to buy some cheap put insurance to the downside over the course of the next month. You just see how this shakes out, because you don't want to sell now, and then obviously it blows off to 60K and you kick yourself for missing it and make a bad decision and rush in. So there's kind of some advanced ways that you can do that, where you can de-risk yourself while still remaining exposed, and I think that's what you want to do in this scenario.
Okay, so rather actually getting out of the game, using that collateral to your advantage. That's a sophisticated play.
Put it to work for you.
Yeah. And I think, Ben, you've talked about the importance of having some skin in the game. I think the challenge that you have when you liquidate and go zero exposure is that on these impulse moves, you can feel the need to jump back in at the wrong time.
Yeah, it's a recipe for making a bad move. One that you hadn't thought about prior. I kind of always talk about trying to plan ahead, try to plan out any moves that might happen, and try to formulate a game plan in your head so that when that moment does happen, you're not sitting there trying to come up with a strategy or rationale as to maybe why something's happening or what's going to happen. Because the worst thing that you want is to wake up today and feel like you're underallocated, and then all of a sudden you need to figure out how to get in, and you will be rushing. And this is where memes are made. This is when individuals go ahead and they click the buy button and the market moves against them. And then they feel like they need to double down. And that's when they start getting in trouble because they did not consider this as a viable path and how to play it, how to work with it. You know, what JJ is mentioning is something that it's clearly not used enough. I mean, because we get questions all the time on how to use options. I have people reaching out, asking questions as well. Is this right? Is this kind of like how you would sell a call, or so on and so forth? And it's clear that there's a lot of education that needs to happen for at least crypto natives on how options can play this role, so that you don't have to go ahead and just kind of run and hit the buy button and just put yourself in a terrible position that's hard to get out of before kind of the meat of a bull run hits.
Yeah, you always want to maintain some exposure for sure.
And I want to put this out to everyone. It's kind of a meta question. Our analysis and our take here, I think, is distinct from the rest of the influencers. We don't consider ourselves influencers here on YouTube. We consider ourselves analysts, researchers, kind of a combined group of that. And this is for the sophisticated trader. We want to give you the assessments so you can go out and learn skills to be able to trade. This isn't about FOMOing in to buys and trying to go 100x long on a single play. This is about building a portfolio over time and learning those skills. As as Ben Lilly already mentioned, JJ has a whole host of videos that he's continued to add to the library of options videos, which I think are absolutely so important for people trying to play this cycle, and then moving forward as the market continues to mature, as options become a bigger part of the industry. You're going to want to know how to use them. So definitely check out those options videos. And as our platform continues to emerge, we're going to have more ways so you can interact with us, ask more questions, and get deeper into that. I know there's a question already here asking for more input from JJ, Strata Trader. I'll just answer that. It says, would like to hear more from JJ in this vid or next video on which platform example of how to sell out of the money put options. We have some of those. We've talked about them a couple times on sort of the coin call platform, which we talked about, and we've shared actual images of doing that. So definitely in the last couple of videos, definitely check out the end. You can go to the chapters at the end and actually see where we go through some of those calls, and JJ walks you through how to actually place those trades on.
I'll walk through this one real quick,
call.
just for an example. So say you have you own a spot Bitcoin, right? Price has gone up 10% in a day, and you're like, okay, I really want to de-risk now. What if it drops back to sub 50 by next week into the monthly close? So what you could basically do here, you deposit your one Bitcoin. I'm looking at the March 28th order book here on CoinCall. So you deposit that Bitcoin, you sell this $60,000 call against it. You collect $3,100 of premium. So that gets credited to your account. And the Bitcoin you own protects you against upside. So basically, if Bitcoin is below 63,100, you make money on this contract at the end of March. If it's below 60,000, you collect all of this premium. But basically, everything below 63,100 is your profit on that. And then you could take that premium and buy out of the money puts, which we see are very cheap right now relative to calls. So you could buy a $52,000 put for $1,500, and this basically locks in your downside losses at 5,200 minus 1,500, which is around 5,500. So anything below 50,500 is your profit on this put contract. And you can hold this positioning till the end of March, and you don't have to worry what price does. You're just collecting this premium if price does nothing, and this is protecting your downside. By owning this, you still have your full Bitcoin worth of exposure, and then you can see where we're at the end of March. If you want to continue to hold that Bitcoin, if you want to do something similar again, it just to not use the pun, no pun intended, but it keeps your options open and allows you to kind of express long-term, short-term views without fully de-risking in a bull market.
JJ coming in with the dad joke, even childless as he is. Oh man, that's good. Yeah, and
can I jump in and just talk about how JJ's videos are really, really well done? Because there's like this whole mental framework about Bitcoin that we tend to almost gloss over when it comes to options. Right? There is this halving, and until proven that it doesn't work anymore, and that maybe some other factor is causing these multi-year cycles to exist, he really breaks down like what strategy for options do you use in various parts of that cycle, of that multi-year cycle. And so right now he's almost telling you, hey, look, you can go ahead and like farm the market of yield on your Bitcoin that you already purchased. How are you going to go ahead and do that? Implied volatility is running up. Go ahead, take a little cream off the top, protect your downside. Okay, get ready for the next leg. Go ahead, do it again. And he has that, I forget the exact name of your strategy of where it is in the cycle, but then eventually it's going to start to turn. And when that starts to turn, there's essentially another host of strategies that he discusses to go ahead and deploy into the market, because yep. So you're like reaching kind of like this FOMO aspect of the market. So what should you do when it comes to options? And he actually lays it out, and it's really nicely done. I haven't seen anybody break down options in sort of this mental framework model that he put together. So I highly recommend it. Even if you're not going to do options, it just helps understand kind of these cycles and almost the psychology behind trading overall.
Yeah. I couldn't agree more.
I can't take too much credit for that. There was a lot of inputs from the team.
Take all the credit. He's a little humble. He's a little humble.
Like, look at this, right? These contracts, these $60,000 calls, they expire in roughly 4 weeks, right? And we see how absurd these premiums are. And that's due to that hedging effect, the squeeze that we were discussing earlier, is that people didn't want to hedge earlier. Now they have to hedge and they have to pay a premium for doing so. So what do you think the odds are of Bitcoin expiring at the end of March being above 63,000? It might wick there, but I don't think it's going to sustain above there for a month. It might, but again, if you're selling covered calls, you're fully covered. So this is the market giving you an opportunity to short. Really, like, this is a very high premium on these contracts, and they expire in a short amount of time. So if you do this and you buy this, even if the put expires worthless, you're still up $1,500. And then volatility will die down if we just end the month in this like $52,000 to $55,000 range. And you could ultimately buy out of the money calls at, say, all-time highs that expire in June. Like, it just allows you to continually rake in profits and then use that to basically parlay and add more gains for what could be a wild bull run this year. So it really gives you a lot of flexibility in markets, which is an underrated aspect. Not enough people utilize it.
And if that doesn't get you excited to start paper trading and even doing some small trades on CoinCall, I don't know what would. This is exactly what JJ does day in and day out. And he's giving you his strategies, his thinking, so that you can start preparing, getting some of those skills. But with that, guys, we're going to wrap up today's show. As we do, the market's sitting about 57,000 for Bitcoin, 3,260 on Ethereum. I know we didn't even get to Ethereum, which I know there's a lot of questions about, so we'll have to come back to that another time. But JJ, Ben Lilly, thanks for being here. Thanks for breaking down what happened in the market. For all those out there, I want to thank you as well. Appreciate you being here every Tuesday and Thursday as we go around the market, give you some insights on how to trade options, and talk about what's coming up. As always, I'm going to give my PSA. Be sure to have some dry powder. We don't know when those market opportunities are going to hit with the volatility that Ben Lilly just talked about. When they do, you're going to need the money. And with that, we'll sign off.